recording started. There we go. So from the harmonic setup video, this was one of the plays in there. We were talking about, look, optimum entries down here. You don't have to size up fully. You can size up at a confirmed trend shift, which happened when this lower high that led to the fresh lower low got taken out, right? So you could have laid in here, and we talked about initial entries down here, of course, in the harmonic setup video. Then we talked about, okay, well, how do you size up on this? You either get the pullback to the gray box, was one of the scenarios, or you flip the red line and you go. Right, those were the two scenarios we'll be looking at beforehand. So if you're looking at daily price action, remember time frame alignment in my system, you're looking at 1 hour to 4 hour entry models. And if you go to those time frames, what you see is, okay, a cumulative, right? Smiley face, the red line got flipped to support, and then after that, what did you do? This is why harmonics are so powerful on the macro. You ran straight to take out all of your targets within 1 week. Right, within 1 week. That is crazy, and so many coins have been doing this. So again, I know I've not released the official update to the harmonic setup video. If you guys don't know which one that is, go back into my channel. It was like a 3-hour long video. I went over all the completed harmonic setups at the start of September, so it was before the big moves up. Literally, like, every one of those has slowly been playing out now, right? So, and that's the power of swinging, right? If you swing with the ladder ringing strategy I've been telling you guys, remember, allocation for CMP, allocation for DCAs if you go lower, or if you flip local resistances into support, and a final allocation for when the trend shift occurs, right? If you'd been doing that on any of the setups I gave, it's been cash money, right? Because it was literally at the lows before the election results went live. Seasonality was with us. So all the coins we were talking about, where people were like, other examples I can give, XRP. Right, we talked about XRP a few times on stream, saying, look, the setup is very, very good, right? Yes, you might not be good for trading, like if you're like a leverage trader and you're trying to trade on the daily, but if you're looking at this on the weekly perspective, what we said was, look at it, it's ever since 2017, it's been making higher lows, higher lows, higher lows, right? Smiley face structure again. You had 2018 to 2019 buyer zone in there, right? So very, very key levels again. All of those were defended, and I'll go back here, and this is something we talked about on stream a couple of times as well. And again, we're not surprised we're having this big move up now, right? Because the setup was there, the price action was telling us, over time someone is accumulating this, right? Buying the hell out of this. Same with ADA, right? This is one we talked about, and I said, look, if you want to get into ADA, you have a completed shark at a key area, right? Your trend line is being respected. This is the ideal entry in terms of risk management, right? We talked about ADA. And then, so we're not surprised again when this thing starts putting in these massive moves up. Right? When I shared this, people were saying, well, that's probably not likely, right? $1.47 seemed really, really far away, but guess what you did within 2 weeks, 2 to 3 weeks? You're nearly there now, right? So if you get a flip of B, you're getting, once again, harmonic terminology, you're getting your BAM triggered, right? Now, a weekly flip of B would be amazing. On the daily, I wouldn't say that's a flip, but on the 4 hours, do we have a flip on the 4? Yes, you do, right there. Right, so on the lower time frame, your BAM has been triggered, but I want to see daily and above, ideally speaking, right? But hey, what does a BAM do? Basically, all you need to know is if a BAM gets triggered, the likelihood of your D point being hit increases, right? So let's say if the B point gets flipped and a BAM gets triggered, the percentage chance of you going to now hit your 886 target goes up to like 70-80%. So then, all likelihood, if you flip this, you're gonna go towards this target. Again, this was highlighted before ADA even broke out, right, from the start of September. Another one that I didn't talk about that went crazy. So this one, I thought I talked about it in my video, but I didn't. So if you guys aren't in XLM, that is, that's my bad. I honestly thought I talked about this in my harmonic setup video, but I hadn't. But XLM is another one that had a completed M shape. Okay. I have another chart for this where I do have everything on. But since I only have an hour, I'm not going to go try to find it. But XLM is another one that did have a completed M shape, right? And again, the reason I'm showing you this is to highlight the importance of when you are at an area, right, where you have confluences stacking up, and not just random confluence, but macro proven confluences like harmonics, like liquidity pockets, like, market structure, price action, right? If everything is telling you, well, there is technically no reason to be overly bearish here, right? You can pull the trigger, you do so. If you miss this move up on many of these coins, don't worry about it, right? This isn't the first cycle. This is not going to be the last cycle. No matter what people tell you, there is going to be another bear market, right? Coins will dump 80% plus again, and then you will get buying opportunities like this in the future. But if you were sidelined for the majority of the move up so far, just, journal it, write it down, record a video of yourself speaking to yourself. But just in any way, just get it into your head that when you get opportunities like this in the future again, you don't fade it. Because look how quickly things change. Right? That is hard to believe. Within 2 weeks, and every single one of these within 2 weeks, when you get your targets being hit. After how long? Right? And this is just market psychology. They chop you out. They make you lose your liquidity, right? Market participants get tired. Everyone's lost their money, and then all of a sudden, boom! Within 2 weeks, you've lost out on generational wealth, right? But this is just normal market psychology. So again, if this was your first experience of being in at the lows, and then seeing such huge moves upside, don't let it dishearten you. If you've not, secured the move, if you've not extracted value from the move, just take it as a lesson. Okay, no one's going to be perfect, especially if it's your first time. But like I said, all of these setups I've been giving out, I've been taking these. So just as to show I'm not LARPing, here are the 4 swings I've currently got open. For those, I've got way more swings open, of course, but just wanted to highlight those in particular because these are all coins people said are not gonna pump. Everyone was shitting on XRP, everyone was shitting on ADA, everyone was shitting on XLM. Everyone was, actually, I'm not really sure about Sand, but anyway, it was like no one was talking about these. That's the point, right? But the framework was presented. I gave you guys the framework. I gave you guys this is how you enter, this is how you ladder in, this is your invalidation. Everything was given live on stream, recorded, put on YouTube, and I can't force you to pull the trigger at the end of the day. All I can tell you is show you the key levels, show you what I'm looking at, how I'm going to enter. Now, what you do with the information is up to you, right? But this is a example of how quickly markets can change, right? So if you miss this, don't worry, because when we go to the top, right, there's going to be a period of consolidation again. Everyone's going to be bullish, but you are going to see distributive structure come in. Exactly like we saw cumulative structure come in at the lows, you're going to see distributive structure come in at the top. People aren't going to be telling you to take profits. Most people, right, especially retail, people aren't going to be telling you, oh, you know what, you might want to sell your bags, you might want to take heavy profits here. If I see distributive structure, exactly like I saw the cumulative structure at the lows, I will be telling you guys live on stream, okay, I'm closing majority of my positions here. I am taking profit, I'm opening some hedge shorts. Right? We'll have opportunities to catch the move back down again with shorts, right? But now the problem with that is you can't do that on spot, right? You're gonna have to go to leverage. The benefit of buying at the lows, you can buy on spot, right? You don't have to worry about getting liquidated or whatnot. You can buy on spot. You don't have the luxury of doing that when you're trying to hedge the downside. You have to use leverage. But I will be telling you guys live on stream, just like I did for these, right? I'll release on the video probably, saying, look, these look distributive. We're seeing bearish divergences. We're seeing distributive structure come in. We're seeing absorption. If I see all those signs on a high enough time frame, and I see local price action support that, then I'll be telling you guys, just like I did for the lows, I'm entering longs. I'll be telling I'm entering shorts. But that was I just wanted a quick update on how quickly markets can change, right? Just think about it, like how long were we in just absolute doom mode? People just got chopped and boom, straight up. It's just bull market psychology 101, right? And this is going to be the bear market psychology. The only difference is, for bear markets, obviously, you're not looking for the big green candles. You're not looking for the big red candles, trying to extract value off the moves down, right? But there's loads of swings I haven't updated yet, right? Loads of memes, loads of other projects from here. Even with my top 10, I've not updated yet. I'm not really touched my top 10. Obviously, these, ADA, XRP, so on and so forth, those aren't in my top 10. Those are my main bags, right? That's in my leverage swing account. That's for, okay, I've caught the move on this. I'm taking a nice chunk of profit. I'm going to use that profit to treat myself, treat my loved ones, and if not, then I'm also going to use that profit to recompound into buys in the future, right? One sec, guys, give me 1 quick minute. I've got an Amazon parcel I need to collect. Literally, like 1 second. You're sub Caleb, bro. 1 sec. Sorry about that, guys. Yeah, how you doing, bro? Caleb. Right. Let's go to the majors now. Bitcoin, nice little pullback. Let me hide this real quick. So, this is what I'm currently looking at for Bitcoin. If anyone's flipping bearish already, please don't. That's the first thing I'll say. Your sub tip, bro. 89k sweep. Yeah, seems likely. If you're already flipping bearish on this, I don't know what to tell you. Don't be flipping bearish for no reason. Okay. There is nothing in the structure telling you that you know, we're distributing this at the top. There's nothing at all yet, right? All we did is we front ran 100k. That was it. 100k being a psychological level, we front ran it, no problem. We're probably going to take it at some point. How high did we go? 99,661 on the index chart. So this is what I'm currently looking at for Bitcoin. Right, I'm just looking at a simple AB equals CD, keeping it very, very simple. First target, the 2.24. Right, we had a 0.382 retracement. The reciprocal ratio says 2.24 is your first target if you have a 0.382. Right, the 2.24 is at 101,332. Right, so that's my first target. The 2.618, which is the second reciprocal ratio for the 0.382, is at 109,731, and in extremely overextended cases, the 0.382 can also go up to the 3.618, right? So the 3.618 is going to be at God damn it, one sec, there we go, perfect. So that is 101,981, do that, and I'll just put that down. So I've been saying this for a while now. I honestly don't believe this is the cycle where we go to 200k. For now, I could be proven wrong. I'm happy to be proven wrong, right? It's just more money for us at the end of the day. But I do not think this is going to be the cycle where we go 200k plus, right? So for me, my max Moonboy target is around 140k. And maybe the 2028 cycle onwards, that's when we actually cross that, you know, 200k boundary. There we go. So put down the group 7. So there's my 3 extension targets, right? So we've not even hit the first one yet, the 2.24. So there's nothing bearish about this candle, right? This is just, look, you've had up only for 3-4 weeks now, right? This is just a little cool off we're having. The way I'm looking at it is this, right? Here is your seller zone. Here's your seller and buyer zone right next to each other based on the last 2 weekly candles. As long as we do not start closing below 89,416, we're going to resume upwards. It's the way I see it for now. Okay, keeping it very, very simple. What I don't want to see is this. If I go on the daily and I draw this on, here we go. What I don't want to see is us sweeping the lows, but then failing to recapture, right? If we do this and then we start putting in swing failure patterns, coming back into this zone, right, like this, and let's say you come up here, but then the candle bodies start closing below the mid of this area, that is when I would be looking to take a potential big short to try and hedge for further downside, right? But if that's only if we get this scenario, that's the only way I'll flip like bearish on a more local scale, right? Until this happens, in my opinion, there's nothing to be bearish about. You literally, you know, you're retesting levels you literally put in like previous weeks. That's all you're doing right now, right? You went to you're at the daily buyer and a seller zone right next to each other in this case. Obviously, but you can see locally speaking, it's important support resistance. There's your weekly as well, 93,432, 91,424, and then 89,416. Those are the 3 levels you're watching for right now, right? As long as you're not below 89,416, like all's good, honestly. And better still is even if you go below there, you actually end up closing your weekly candles and whatnot above 91,214. Above the mid of this, you're completely fine. There's nothing to worry about. You're probably going to resume upwards. Right? But if you start now closing below 91,424, that is where I'll start being a bit more cautious, right? So, because then you have the potential to start swing failure, putting in swing failure patterns at this area. If that happens, that is local distributive structure, right? Initial resistance. There's your radon liquidity, right? Which is probably backed by market longs. Yep, market order bubbles. There's market longs coming in, and then reconfirmation of this area's resistance. What it does a few things. Firstly, it proves this is deviation. Secondly, it confirms that there is trap traders here, right? People who open long here is going to be forced to cover lower if they haven't already covered. Thirdly, what it also shows is a sign of absorption, right? That is a sign of absorption. People are market longing, and yet candles still closing below. Meaning, okay, but where did all that demand go? It just means that all the demand from the active market participants was absorbed by the passive market participants. The passive market participants being the people that have got their limit sells in this order, right? Or limit shorts. So people are taking profit, people are opening shorts, front running the 100k level. And you see this a lot, right? Around psychological levels, they'll either completely extend past it or they'll front run it, engineer some liquidity, and make people think, oh yeah, this is it, we're not going to hit it, right? I wouldn't be surprised if this happens. And then you blow through everyone, stop how everyone's shorts anyway, right? So we're probably like going to get one or the other scenario here. So we're either going to have a quick bounce and then just go past and extend past the 100k level, right? Liquidate anyone that's trying to short at 100k and above, because it's a psychological level, so people will be doing it. And if that's not the scenario, we probably chop around here for a bit longer than people expect, and then go through everyone, right? Engineer some liquidity, some shorts, let people short lower highs, and then go stop everyone out, right? One of the two scenarios is probably going to happen. But as of right now, there is no technical damage that has been done to the chart on any significant time scale. Okay, so there's nothing to be worried about. What I'm trying to say is, like, if you look at, you know, bull market retracements, you can retrace up to 30%, right? That like, I think on average 30% is a 30% is a normal retracement, right? If you have a 30% retracement from this peak right now, just here, let's say just around 30, that would take us down towards 69. I do not think we go this low, right? But even in the off chance that we did, right? Even in the off chance that we actually went down to these areas, as long as you end up actually using this area support, right? Why this area in particular, that your 3-month seller zone is in this area. As long as you end up using this area support and closing above, again, no technical damage has been done to the chart. You'd have a breakout and then you'd have a retest of your consolidation range highs before going higher. And if this happened, then in my opinion, you actually go higher than, like, you know, you probably go to those high 140k targets, right? If you get this pullback here, I think the chance of that happening increases, because now you have much more demand. People get to big backing again. But I don't know if we go this low, right? Because that'd be way too nice of a retest to give to someone if they're sidelined. So honestly, I don't think we go this low. We'll have to wait and see, of course, right? I might be wrong. We might get the perfect retest and go higher. But for now, right, locally speaking, there's been no technical damage done to the chart, so I won't worry about anything. Like I said, I'd only be worried if we start now doing this, because that would be distributive structure, right? And that would make me think we're probably going to have a deeper flush, maybe 80k, right? Something like that. Maybe do something like this, create a new range and go higher. And if you lose that 80k area, that is when I'd look for this red box. But yeah, right now there's been no technical damage done to the chart. This is not an area where I look for active trades on BTC, of course, right? So my current swings from like 39k down over here. But if you're scalping, it's a different story, right? You can scalp based off these 3 levels in mind. So for example, if you go to the top of this zone, if you go to these zones and you start seeing, you know, hourly closes below, you can try and take like intraday scalps to the downside. If you flip intraday scalps to the upside, right? So the only way I'd be trading Bitcoin right now is on the lower time frame. There's nothing to be had on the higher time frame. No swing longs to be opened, no swing shorts to be opened, right? You've not got an argument for either side. So yeah, there's nothing much to say here for Bitcoin really. Now it's just in price discovery and it's having a slight pullback. That's literally it. $702.707 fib. Yeah. Yeah, the alt's absolutely bounced, bro. Okay, let's take a look. Okay, so that's BTC. Before we move on to ETH and others, let's actually look at the one thing I'm watching, Dixie, right? Because this thing just hasn't been actually wait, on the daily, yes, on the weekly. Okay, that's a nice weekly reaction. So what you've done on the Dixie, this is the same range we were in, right? Again, same reason I gave those calls in 2023, because our true range got raided, but then you started closing below the 382, right? So that was the trigger for going so risk on back in November, if you guys, sorry, back in 2023, around this time last year, if you guys were around then. What we're trying to do right now is what was once resistance is currently there's a battle ongoing, right? If this keeps being flipped to support, I honestly think Dixie goes higher. Okay, so yes, we've taken external liquidity now, right? So this external liquidity has also been taken. There is no more external targets up until, like, you know, let's say all the way up to 112. But if we keep flipping the 382 into support, then I think there's a chance we go up higher towards, like, you know, 109-ish before we see a sell-off, right? And this, in my opinion, would correlate with Bitcoin having like a bit deeper dump than most people are expecting. But we'll see what happens, right? The weekly might close under, we might put in a lower high, and then we might just roll over again, which is what I'm hoping for. But we know it's not a one-to-one relationship between the Dixie and crypto markets, or between the Dixie and stock markets, right? It's not a one-to-one relationship. But for every serious alt season we've had, on the higher time frame, right? We need Dixie to be bearish for us to get those, you know, proper euphoric risk-on environments. We just haven't had that yet, with the Dixie being bullish, right? And global liquidity, if you think about it in terms of global liquidity right now as well, like, global liquidity isn't going up yet, right? Global liquidity is still stagnating. So that's something else. That's the only concern I have right now with the Dixie being bullish, and also, like, you know, the Fed still hasn't done quantitative easing. They've been quantitative tightening still. That just means they're very risk off with their balance sheet, right? You know, you want the Fed going quantitative easing. You want them spending, you know, putting their risk on into, like, these, you know, into risk on assets. Quantitative easing is what you want, not quantitative tightening. And we're still in the quantitative tightening phase with the. So we'll see what the December FOMC brings. But that's just one thing I'm watching for right now, right? The 382. As long as this holds on a trader's perspective, we could chop around here some more, go a bit higher. If we start doing this, that would be super good for us, because in my opinion that would be very indicative of the Dixie going back down to its range lows again, and maybe then actually finally going to lose these range lows, right? So we'll see what happens. But you do want a bearish Dixie for that full-on, you know, full-blown alt season. You do want a bearish Dixie. You want this to go down. USDT dominance. USDT dominance doing something pretty significant. Finally, that demand line we've got drawn on, right, for a long time, that demand line, we've actually lost it. Right, this is the first time in history you've gone and lost that. And currently you're attempting to retest, right? But if you keep closing below this now, that is a breakdown and a failed recapture. Right, so just for the sake of confirmation, I'd want both this and this to be a failed retest. So, you know, do this. But if you do these two things, I think USDT dominance crashes. And hopefully this lines up with the Dixie crashing as well. If that happened, it'd be perfect, honestly. You'd get, you know, your alts are going to start absolutely ripping. All season is going to come around. Total 3, total others is going to go to fresh all-time highs. But do keep an eye on this, right? Finally, we've been talking about, you know, you want this breakdown to be on a full-on risk-on environment for crypto. And we're finally getting a breakdown and an attempted retest for now. 5 days left. Before you know, you could do this. If you close back above, then there's a chance you do this. Something like that, right? But if you close below, then the likelihood of this happening is much higher. Chop, and then do this perhaps, right? So yeah, definitely keep an eye on USD dominance. Not much to say here. You add the pivotal area. Whichever, you know, if bulls are to win this, then we go risk off on crypto again. If bears are to win this, we go risk on crypto, right? That, and by that I mean, you know, your alts are gonna fly. BTC is probably gonna go to higher targets. ETH's gonna run, right? Solana, everything, you know, is gonna run. You could. That's gonna be like, you know, put your money in something is probably gonna go up season. Okay, so USDT plus USDC dominance, another one I like looking at. If we do get a big crash on USDT dominance, right, this is something I am potentially eyeing. An 886, so basically a macro bat on USDT plus USDC dominance. Around 3% would be the target. 3.06 to 2.81, somewhere around there. And then from there we look to take profits, and depending on what kind of reaction got there, right, we get there, we look to take profits, or we look to see, oh, that's really really bearish. Because if buyers show, for this particular ticker, right, in terms of buyers versus sellers, if buyers show no strength in this area, then you go lower, right, and your markets are going to keep going higher. But if you get here and then buyers start validating this level, right, you start getting SFPs, but then candle body closes above this area, you start seeing local, like, double bottoms being formed, like a sign that buyers are validating this, that'll be a sign for you to take profits at least and open some hedge shorts. Because then if this goes back up, that is going to be correlative of money leaving the crypto market, going back into stables, right? So not leaving the crypto market per se, but leaving the order books, let's say, right? Or less liquidity overall out there. So if that happens, you want to be taking profits, no matter if people are giving you silly moonboy targets, take profits, do what's right by you and your portfolio, open some hedges, and you thank yourself, because if this does bounce, then you're going to see a market-wide bleed down, right? But for now, for the bull market target, let's see if we get that 886 on this. Honestly, that'd be lovely. So let's see what happens. And what else do we have? Bitcoin dominance. Bitcoin dominance, I don't think it's topped yet. We'll see. But the fact is, look, you had a demand zone, a textbook demand zone at that. Impulse, consolidate, impulse back up. That's a textbook demand zone here, right, in history. You mitigated it, and now your mitigated demand zone is being reclaimed as support, right? So what was once an area basically where you expected buyers to be in control over the sellers, demand to be greater than supply, was completely ran through, right? This was invalidated. And so over here, the thesis was clearly sellers are in control over the buyers, supply is greater than demand. That's what this means, because a bullish order block was a bullish demand zone, was completely ran through, right? You mitigated this. This is no longer a liquidity pocket, but you can still use the fact that it used to be a liquidity pocket, right? This is what I call mitigated liquidity pockets in my system, by simply using the fact of what it used to be to ascertain current price action, right? It used to be an area where buyers were in control over the sellers, demand was expected to be greater than supply. So if buyers are now stepping up and showing signs of bullishness here again, what we're saying is this exact same thesis is once again being imposed here, right? Buyers are once again trying to take control back over the sellers. Demand is once again trying to outweigh the supply. If that happens, then my next target would be 62 to 62.11 to 62.51%, right? We can see every time you've got above this zone, you've gone to here minimum before, SFPing and going lower. So if they just keep holding like this, I wouldn't be surprised if we got this. Who knows? Maybe, they decide, we are going to pump Bitcoin to 200K. If that does happen, expect this to go much higher, right? 67.66%, maybe back towards range highs towards here. This would correlate, in my opinion, with Bitcoin going much higher than what I'm talking about, which is 101 to max 140, right? So let's see. But for now, 62.51 to 62.11, that zone there. Let's see what kind of reaction we get there first. If we start flipping this to support, then we can talk about 64, right? 60, 65 area, 67. That'll come level by level. But for now, as long as you're above this, you have a shot at going back up towards there. But if you close below this and swing failure pattern, again, that is distributive structure happening, then perhaps Bitcoin dominance has topped. We're going to get a deeper correction on this, and that's going to correlate with all liquidity really, really going into your altcoins, right? So if we have a scenario where Dixie's crashing, USDT dominance is also crashing, and Bitcoin dominance is crashing, you don't need anything else to know. You shouldn't be asking, are we in an all season yet, if all those three things are happening, basically, right? So that's going to be correlated with all season. I'll take a look at Sol in a minute, bro. Okay, so let's take a look. We have total. Again, this is what I'm looking for, total. On total, I see two different AB equals CDs, right? The first one being this. From this swing low here to this high to this low was a 786. If you get a 786 retracement for your ABCD, the reciprocal ratio is the 1.272. The 1.272 was a raid of previous all-time highs. Actually, no, it wasn't. I'm lying. It was just below previous all-time highs. So on total one, if you now get a pullback, which is what we're getting, and you test 3.01 to 2.99 trillion, right? You have a successful retest of this gray box, basically. That is very, very bullish. Again, this is another, if you're feeling bearish on Bitcoin right now, just look at this chart. This is all you need to look at. Total one, tell me what about this is bearish, right? You've broken out from previous all-time highs. And so far you haven't even retested the previous all-time highs yet. If you fail the retest of the previous all-time highs, then you have a reason to be worried, because you're saying, okay, initial rejection, radon liquidity, reconfirmation of resistance, right? You have, again, distributive structure, which could imply maybe you're going to have a deeper correction before going up. In that scenario, sure, I'll understand the bearishness. That might be prevalent, right? But right now, there should be none, because you've had a breakout, you haven't even had a retest yet. For all you know, you don't even get this retest, they just send it off from here, right? You're not entitled to a retest at the end of the day. So if we fail, then yes, if the distributive scenario plays out, then you have a reason to be cautious. But until then, any successful retest of this zone is literally going to be previous all-time highs, has been flipped to support, and my next target above this 1.272, the next thing I've got is this. You have a 0.5 retracement from this A, B to the C. If you have a 0.5 retracement, you're looking for the reciprocal ratio to be 2.0. That sends us to 3.72 trillion. And if you get above this, then you'd have to look for fresh targets, right? But for now, these are the two that I see on the screen. So 3.72 trillion is the next stop. As long as we are above the area, as long as we're above this gray zone, right? Especially the mid, 3.72 trillion is the next stop, in my opinion, right? So we've went as high as 3.36. Right, and that already sent, just from here to here, that already sent Bitcoin to 90k, right? This much is more than enough to send Bitcoin to those, even the Moonboy targets we're talking about, like 140k, right? This much is more than enough to send Bitcoin to that. So we'll see what happens, right? For you might fail this retest, but it's not happened yet. And if it's not happened yet, we're not gonna bog down with the what ifs. We're just gonna go with what's on our screen right now, right? So total one, total two. On total 2, again, I see a few things, right? Let's take a look. The main one I'm looking at is A, B, C. There's your 618, right? If you have the 618 retracement, you have the 1.618 as your primary ratio for your projection, right? So that goes A, B, C, D. Again, you've not hit this target. And this is a completely viable target because it's not even the all-time highs for total 2. Right, I do think Ethereum's going to make fresh highs, and if I think that total 2 is probably going to make new highs as well. Right, so this is a very, very likely target right here, especially if you keep successfully flipping the mid of this 3-month seller zone. Right, we go to the 3 months, and I turn this off, and I turn this off as well. There you go. This is the area where sellers were in control in the 3 months, and now what you're doing on the weekly is you're retesting the breakout of this. An area where sellers were in control is now an area where buyers are in control. That is very, very bullish. If this was an asset class you could trade, you would long this based off the close on the weekly, right? If you were time frame aligning, you would take a trade after this successful retest, right? You would layer in, and then if the weekly closed successfully, you'd open your full position size. If this was a ticker you could trade, right? So as long as you're above the mid of this zone, you're gonna push higher. Now again, if you start doing this, then you have a reason to be concerned. Right? Again, resistance, radon liquidity, reconfirmation of resistance. It's the inverted smiley face, right? The smiley faces and the inverted smiley faces, my two favorite structures to look at, because one is accumulative, this one is distributive, right? Pair that up with your key levels is honestly a cheat code, in my opinion. But if you get this scenario again, just like we've been describing with other asset classes, then yes, you might be inclined to believe, yeah, we're probably going to go a bit lower, right? But as long as you're above this, again, you have no reason to be bearish. Ethereum still has loads of potential to the upside, right? Now, if you get above this right over here, right? So there is another AB equals CD target that takes us to 2.12 trillion. So this is if you look for the 2.618 extension, right? The 2.618 is not a reciprocal ratio of the 618, it is of the 382, but I just put it down anyway because it's a primary projection. After the 1.618, it is the 2.618, right? So I've just marked it down. So if you get above previous all-time highs, around 2.12 trillion is what I'll be looking at next. But again, you can see like even the totals is telling you, right? We've got legs, right? We've definitely got legs. Total 1 is literally in the clear. All it needs to do is stay above 3 trillion. It's gonna go higher. Total 2 needs to stay above this 3-month seller zone. Right, currently you're rejecting off of the 12-month 2022 12-month like seller zone high basically, right? But your actual external liquidity, if you're talking about this in terms of liquidity now, is literally at all-time highs. Right, it's at all-time highs on the higher time frame. You go to the monthly, anything like this, the next external liquidity is at all-time highs. So the chances are we do go there at some point, right? So don't. I'm trying to say is don't close all your positions if you're already in an ETH long from the lows or something like this. Don't be like I'm going to take no, not financial advice, but I wouldn't fully close your positions yet, because there is no signs of bearishness on ETH, right? You need to know when to play defensive, of course. In my opinion, now is not the time. Play defensive in the sense, don't take stupid trades and don't size up right now. But if you're already in from the lows, you should not be fully closing your position size here thinking we're going to crash, right? If you get below here, then sure, take more profits because you might get a chance to add back in a bit lower on ETH. But as long as we're staying above this, ETH is going to go higher, as long as total 2 goes higher. So that's total 2. We can look at total 3. Right, again, total 3, we've got some deep extensions here. Your 1.618 target for total 3, why do I have that off? 1 second. The 1.618 should be your main concern. Actually, I think the 1.618 is pretty much hit. Yeah, I'd say the 1.618 is pretty much hit on total 3, which is why we're getting this rejection here, right? You've just about front run your actual 1.618 level, which is just a smidge higher. But again, as long as you're above this zone now, on total 3, you are going to go higher. Right, so just something like this perhaps, and then go higher. And again, 2.618 target is up there. I've put it down on the screen, right? Again, it's not an official reciprocal ratio, but it's literally, if you get above this, 2.618 would be the next target based on this, right? Based on this pip retracement, 2.618 would be the next primary projection after the 1.618, which is why I've got it pinned down. But you can see total 1, total 2, like very, very clean. Total 1 already above everything it needs to be, right? Which is why Bitcoin's of course been in the lead. Total 2, not above all the resistances yet, but it's getting there. It's above its higher time frame 3-month seller zone. It's at least breached into its 12-month previous bull market resistance area, basically. Total 3 has also done the same, but it's currently below that, right? But at the end of the day, as long as you stay above 873.62, right? On the high time frame perspective, above 873.62 billion, right? Your next target is 1 trillion, and after that is 1.13 trillion, and after that is fresh highs, right? So total 3 also looks great. Nothing bearish about this. Total others, right? Why are we rejecting? We hit the top of this box we had marked out, right? The range highs. So obviously our resistance is what you expect, a slight rejection, which is why you're also taking a slight hit today, right? Because total others is having a slight pullback. Does not mean, again, that it's bearish. Now what you see is, right, and why I'm saying proper all season isn't here yet, total 1 and total 2, total 1 is already at price discovery, total 2 is never enough close to price discovery, right? Once ETH gets that rotation, it will be the next one to get there in my opinion. Total 3 isn't in price discovery yet, but it's getting there slowly, right? So this is your crypto market cap excluding BTC and ETH. So what this is telling you is the bigger market cap coins have also caught some nice bids, but they've still got room to run, right? Just like Ethereum, your bigger market caps, that's not Bitcoin and Ethereum, still have legs to run. But what you notice is total others, right? Total others is still below its major resistance. It hasn't even touched its previous cycle seller zone yet, 379.57 billion. It hasn't even attempted a breach into this yet, right? When this happens, this is when your alts, right? Not in like you're not your big alts in like the front page of CoinMarketCap, but other alts people might not be looking at, right? Basically anything that has an area where you can manage your risk, they're all probably gonna pump, because this total others, when this happens and this goes into price discovery, this is total market cap excluding the top 10, right? So all your shitters are gonna absolutely rip at some point. It's not there yet because again you're still below some key resistance, right? You hit it and you reject it for now, but as long as you now don't lose this level, as long as you do something like this, you're completely fine. Even if you do this, that's just going to be a nice area for us to bid on, right? Even if you pull back all the way down here, it's just going to give us nice areas for these alts to actually load our bags up. So let's see, we have this key area here, just we're going to draw it roughly, right? As long as this holds, we'll go higher. If this is lost, then this area, probably something like that. But in all instances, right, Bitcoin should still be your main focus in terms of, okay, if you're actively trading, day trading, so don't try to scalp the shitters yet, right? Bitcoin should still be your main focus if you're trading actively. You should not be fading Ethereum, right? And if for these alts, perhaps be a little cautious if they're not in the top 10 right now because of how total others is looking, it could pull back some more. But if you see an area where you can manage your risk, this also means bid, right? Because the structure is now bullish on all of these: total 1, total 2, total 3, total others, total DeFi, even breakout, retest, right? Everything in all of these, you no longer have bearish structures. You have bullish structures. Your weekly downtrends have been turned, right? They've been broken out of for every single one of these. So you're no longer in bear market. You should, if you're still in bear market PTSD mode, snap yourself out of it, right? Because if we get a pullback again, right, and you still don't bid, you will have no one but yourself to blame if you stay sidelined, right? For the explosive moves up that will come, as long as we don't lose the market structure again. So you take a risk. So if you feel like this is what I'm saying, if you feel like you missed out on the first part of the leg, don't worry about it, right? Because at the end of the day, look at what others' dominance is, right? And last stream we were talking about this. I was saying if you want to be in altcoins, the thesis is very simple. As long as you're above this zone, you bid alts. If you close below, you get rid of alts. That's literally what I was saying, right? Look, you never close below. You never lost it. Important trend of this dominance, the market cap of your shitters, right? Completed M shape. That's a Gartley with a type 2 at key areas from history, right? Take a look. You never lost it, right? Yes, it's at the make it or break it levels, but you never broke it, right? So again, this is why I was saying, as long as you're not below this zone, you're completely fine bidding alts. If you get below this, like this, then very simple, you get out of your altcoins, because this might have a crash, which is going to correlate to a market-wide bleed on your altcoins, right? So we've held it for now. Now we might chop some more, but next thing you're looking for on others' dominance is you're looking for this region to be flipped into support, right? Very, very simple. Why? If it just extended, the level you can see is support resistance. Very, very clear support and resistance. You're just looking for this to be flipped into support next. When this happens, this is your next target. This is going to correlate to, again, a market-wide pump on your altcoins, right? So again, very, very easy. This was literally the easiest indication you had on whether you should be holding alts or not, which is why I went over this so many times. As long as you're holding this zone, you don't cut your altcoins, right? Because you're at the key areas where buyers are going to do their thing as long as the market structure is not to be broken. You just got to have faith in your TA, right? Have faith in your lines. So real quick before we move on to actual charts now, actual coins, sorry. Ethereum has a CME gap down over here, and I believe that is on the day. Actually, wait, have we filled it already? Am I blind? Oh no, we did fill it, sorry. Oh, this happened while I was vacation, that's why. We did fill it. Okay, the CME gap on Ethereum has been filled, right here. What about Bitcoin? Bitcoin had it. Okay, the CME gap on Bitcoin has not been filled. So if anyone is looking for a deep retracement on Bitcoin, this is one argument that I see for it. There's a CME gap down there. Just because there's a CME gap down there doesn't mean it needs to be hit straight away, right? For all you know, they could leave this for 3 years and fill this up in like 2027 end or something like this, right? But they do have a high hit rate, so let's see what happens, right? So that's what I'm saying. There's been no technical damage done to the charts yet, right? There's been no technical damage done to the charts yet. But if you see that scenario now on Bitcoin that I was talking about, that breakdown and then reconfirmation of resistance, then perhaps that's going to correlate to us actually going to fill down the CME gap, right? Something like this. That'd be completely viable. So let's see what happens. But that is all your majors now, right? That's all your majors. Let me quickly check the chat. Yeah, exactly. Smiley equals bullish, upside down smiley equals bearish. One's indicative of accumulation, accumulative structure rather, and the other one, the upside down smiley, is indicative of distribution. Right? So, okay, next let's go over the top 10 bags, right? Which again, if this is your first time in my streams, for me that's BTC, ETH, Solana, Injective, Aptos, Vanry, AVAX, Say, Sweet, Ondo. Those are my top 10. I've been vocal about this, like, ever since I decided that was my top 10. I've been saying it every stream. We've been going over them every stream. Let's go on to Ethereum next. Ethereum targets, let's take a look, right? So again, very, very simple view. I'm going to put some AB equals CDs on the chart, right? The first AB equals CD I'm looking at, let me do this bit by bit so you guys don't get confused. Actually, here. So this is the first AB equals CD I'm looking at, right? So this is going to correlate to your total 2 hitting this target. So again, if I go back to total 2 real quick, there was one AB equals CD target that was just below all-time highs, right? That was that 618 and the 1.618. This on Ethereum is going to correlate to this total 2 being hit, in my opinion, right? So on Ethereum, we have a target of 0.786 on the retracement, right? Pretty much perfect from the last swing low high to the higher low. If you have a 0.786 on the ABC, your D reciprocal ratio is the 1.272, right? So that lines up with 4,640. This is, I will repeat, conservative targets. I think we make new highs on ETH, okay? So it's not like we're gonna get it. I'm gonna sell all my bags, unless of course on the higher time frame you actually get distribution on the weekly, on the 3 days, so on and so forth around this level. But this is the conservative target. I do think we make fresh highs on ETH. So the first target is 4,640, right? That's the AB equals CD. The second target is from that low to that high to that C. That is a 0.618 retracement. If you have a 0.618, you get a 1.618, your primary. So this is your primary retracement. So the reciprocal ratio is a primary projection, right? So the AB equals CD, 1.618 is at 5,316.57, right? Right there. So now this goes to, like, if we see weakness, I would definitely take it seriously, right? I'm not one of those people that thinks ETH's going to go to 10,000 this cycle. I don't think that's going to happen. Of course, again, I could be proven wrong, but I don't think it's going to happen this cycle. After that, as a serious upside target, if you look at the macro structure now, right? A, here's the B, here's the C, it's a 786. It's not the exact bottom, but that's fine, right? You can give yourself a bit of a leeway right here. All that's telling me is, look, we had a wick, buys took control back at the 786, which is right over here. Just read the price action, right? Buys took control back at the 786 and then reconfirmed it as support again. So clearly the 786 is valid, right? That's the way I see it. So you have a 786 and ABC, the 786, again, reciprocal ratio is the 1.272. So if we were to look at this macro structure, the reciprocal lines up at 5,890 ETH. So basically between between 5,316 to 5,890 is where I'm gonna expect Ethereum to top out this cycle, right? Get a correction, and then maybe next bull runs when you go past this towards your 7,000 plus, 10,000 plus targets, right? Of course, by no means am I saying ETH would definitely top out here, and you shouldn't be taking what I'm saying as gospel. I'm simply giving you targets where you can expect there to be significant price action, right? Once we get here, any price action you get here will be significant. So once market structure develops, these will be significant levels where you read your price action and get a unbiased view of the market. So these are my Moonboy targets for ETH right now, between 5,316 to 5,890, right? I think this is possible this cycle. So we'll see what happens, but do not fade this one either, 4,640, because if we do get some sort of shortened cycle scenario, right, where we don't actually have a long bull market, it's very blow off toppy, maybe we don't actually make new highs this cycle. Maybe we just hit this and then consolidate, and then next cycle just have a completely insane run, right? Never say never. Prepare yourself for any possible scenarios. That's why just have your key levels. And when I say prepare yourself for any scenarios, all you have to do, know your key levels, know, okay, what kind of macro situation would we have to be for us to, let's say, not get past this, right? Give yourself those different scenarios, align them with what's happening currently globally, and then most important thing, simply read price action at those areas. That's all you need to do. What's happening in between buyers versus sellers? What's the candles telling you? That's all you need to do. You don't need to overcomplicate it. You don't need to be looking at 10,000 different indicators. Just read the price action in this particular area, right? Use whatever system you're happy with. If that system is telling you we're bearish, there is no sign buyers are active here, doesn't matter how euphoric the market is, take some profits, open a hedge, right? No one's ever been hurt by taking profits. You've definitely been hurt by not taking profits, right? So that's Ethereum. 3 targets for you. 4,640. Flip that, I'll be looking at 5,316. Flip that, I'll be looking at 5,890. If we ever get above this, then I'm going to look for higher possible targets. But for now, I'm just going to leave these 3 on the screen. Last thing I want to do is give you targets of like $8,000, and you guys just laser focus on that. Ignore all of this and just bag hold, thinking they're going to get to 8K. Right? That's going to be detrimental. So for now, I'm just going to be focused on these. So that's Ethereum. Next, let's look at Solana. Again, Solana has AB equals CD. So you've rated all-time highs on Sol, right? What was this? 236. This was another AB equals CD pattern. So if I get rid of this one here, again, from this low to this high to this low, it's not a perfect 786, but it's very, very close. So I'm going to take that as a 786. The reciprocal ratio for that would be somewhere around the 1.272, right? So we hit that, extended past it, rated all-time highs, and then now you've lost it for now, right? So no problem. I wouldn't say Sol is insanely bearish or anything like this, but you are currently swing failure patterning at previous all-time highs. So what we have currently is this. If you get a move back into this area, and then you start to see swing failure patterns coming in again, you can take scalp shorts on Sol, right? That is between 252.94 to 264.53. I wouldn't swing anything right yet because there is no macro indication we've topped out, like I've been saying. That's why until there's macro indication, it's lower time frame entry models with a you're not gonna be entering like, you know, on the weekly thinking I'm gonna hold this for months, right? Because there's nothing on the higher time frame indicating bearishness. But on the lower time frame now, you probably get a nice couple of scalping opportunities to the downside, some chop before you break out, right? So this is the area where you're going to be looking for shorts. Or the next thing is if you actually close below like this and you start to see this is the next area where I look for shorts. So the first area is between 264.53 to 254.2.94. The second area is between 229.99 to 242.07, and last but not least, what you do not want to see on Sol at all is close below and this. Again, why? There's your inverted smiley face. Okay, that would be distributive structure. Initial resistance, radon liquidity, market longs coming in, guarantee it. Right? Let me take a look. This is on the weekly. Go to the daily. Why is this not showing up? 1 second. Why is this not showing up? Right, let me open up Sol on an exchange like Coinbase. There we go, right? Market longs coming in at the peaks. So you've got a move that is fueled by market longs, right? And again, in context, what's happening? You have initial resistance, you have market long moves that's rated all-time highs but closed below, right? And then if you get this on top of that, right, you get this break back down and then reconfirming this as resistance. You're saying, okay, this initial area where sellers were in control, they're in control once again. This would be deviation, trap traders, sign of absorption. I'd be looking for range lows again on Sol basically, right? But that's only if you get the breakdown and close below that level and you get that retest. But until that happens, we're not going to be talking about that scenario, right? So obviously the price action actually needs to happen first. So that is something to watch for in case it happens. You get a really nice short entry here. Otherwise, ultimately, you know, you get a successful retest at this zone, you're going to go higher on Solana. So higher targets. After this, we have another AB equals CD. And if I do this, again, what do you see? We have A, B, C. That is basically a 0.5, right? The reciprocal ratio for the 0.5 is the 2.0. That takes us to a Solana target of 309.80. And for now, this is all I'm going to put on my screen. If we get higher than that, then we can look at, you know, fib retracements, trend-based fib extensions to get our next areas. I don't think there would be any, as of right now, there is no harmonic present to take us higher than this that I can see anyway, unless new data comes in which case we might be able to put some new ones on. So perhaps maybe, right, if we get something like this, where is the ABCD tool here? Maybe, right, we have a here, we have this, maybe you get a 382 again, right? If you get the 382, we know we're looking for the 1.618. Sorry, you know we're looking for the 2.24, right? So that take us to, and then after 2.24 is the 2.618, somewhere around here. And after the 2.618 is the 3.618. So maybe we end up getting a scenario like this, right, where this pullback gives us a new ABCD. But until that happens, this is just speculation, right? Until that happens, what is on our screen is just this ABCD here. So for now, the only valid target we have is 309.80. So that is, for now, what I'm eyeing on Sol. And if we get more data, right, then, of course, I'll put more targets on, and I'll update accordingly. But that is Solana. So for now, right, if you're looking to long Sol, I will not long where it currently is. I'd wait for a pullback either into this zone, right, like this, and successful retest of this zone, right, or a reclaim of 236.95. That's the only two areas you have right now to long Sol. I repeat, not financial advice, but I will not be longing Sol where we currently are. If I quickly turn on 12-month buy seller zones, yeah, right, you've got 215 as being a key level, right? The deeper, so this area where we currently are, you've got no business taking along, right? It's in the middle of nowhere right now. So don't execute it. Either wait for this scenario number one, or scenario number two, something like this. Those are the two areas where you're going to wait for the confirmation of buy stepping in, of it being regarded as support before you pull that trigger on a long. Where you are right now is not an area where you can manage. It's a coin flip if you enter along here. Yeah, you could go higher, you could go lower, right? You don't have a risk management profile right now. So I wouldn't be opening any fresh longs here on Sol. One of the two scenarios described is what I'd be looking for right now to enter along on this. That's probably why. Tip, yeah, you're probably right. That's probably why. Crypto chart doesn't show volume. Yeah. Yeah, I figured it was that. Because the index chart does. So instead of the crypto, I should have put the Sol index on instead. I don't know what the difference is between the index and this. They show the same amount of data. But yeah, that's what it is. That's fine. Okay, so next one. Injective. Hey, I mean, we're saying, right? People, we were here looking at this for the longest time, right? Smiley face structures galore. Initial support, trade on liquidity, reconfirmation of support, double bottom, right? Add key levels, 2021, 2023, 12-month support resistance levels, right? You also had 4-month levels, triannual levels being retested. After that, what did you do? Went up, right? So all the buy signals were given over here. We went up, and the last time we talked about Inj, I was saying, okay, look, if you'd missed the entry here, it's not too late, because we finally taken out. What we've done finally is the last lower high that led to the lower low has been taken out here, right? So the trend on the weekly on Injective has shifted bullish. All we need is a higher low. The higher low could already be in for all we know, or we could have a deeper pullback like this before we go higher. But Injective is now the earliest signs on Injective right now. This is the earliest sign that you've gone from the sell side, which is the downtrend, to the buy side, which is the uptrend. Right? I will keep saying this. In my opinion, Injective has the potential to go to triple digits in the peak bull run mania phase, right? So of course, I'm not going to hold my bag all the way to $100, right? I will take some profits along the way once I've 3x'd my investment, something like this, 2.5, 3x. I'll take my initial plus sum out, leave a moon bag to go towards those higher time frame targets. Majority of my bags will be sold again when I see macro weakness across the board. I don't care if I don't catch the top, right? Swinging. Hopefully, from me showing you the ADA chart, the XRP chart, so on and so forth at the start of the stream, and what I'm going to tell you now is what you realize is, and I keep saying this every stream, taking swing trades isn't about timing the bottom and timing the top. Okay, if you try to do that, you will fail, you will get chopped up. Taking swing trades is about managing your risk and your current portfolio as an area that you consider to be significant, where you can very easily see your invalidation and upside, right? And more than that, it's not just it's not just one mag dumping as soon as you get to that area. You're not just looking to spray and pray. You're going to be conservative with the ammo, right? You're going to buy, like the laddering strategy I gave you, right? Initial CMP, a DCA / local resistance being simply support allocation, and trend shift allocation, right? The trend shift allocation is going to be the last one that's deployed on Inch, right? I have about 30% left for that. When that gets deployed, I'll be fully positioned. My average will definitely be somewhere around this, just because I know I'm not going to wait until all the way up here to employ. So now the trend is shifted. I'm going to be slowly using that trend shift bag to finalize my bag, right? And then I'll have an average price, but I'll be fully positioned only when we've shifted to an uptrend on the weekly. Most people entry DCA1, DCA2, that's fine, right? But many of these trades, these types of trades were given when the coins were still downtrending. You're trying to catch the bottom by doing this. You don't know where the bottom is, right? You got to let the price action develop, which is why I recommended, right? If you wanted to, I shared the strategy I personally use for laddering it, which is have an entry, have a DCA, of course, but have an allocation specifically for when the trend is shifted to the upside, right? Injective has taken out the last lower high that led to the lower low. All you need is now is a higher low, and for you know this was the higher low, right? So I'm just going to be slowly laddering in with a remaining 30% on my bag, right? Just every 4-hour candle. If I see bullishness, by stepping in. I'll leave a bit for if we go down to this zone one more time. But if we don't, then I'll just add it when this gets flipped. It'll be such a tiny amount on my entire port that it's not going to mess my average up at all, right? I'm completely happy with not being fully positioned, right? A little bit of cash left is completely fine with me. So Injective, very simple from here, right? Your first target is 32.953, right? But your main external target is 52. Everything else, all these levels here, they're significant levels, but I'd mainly use these to justify why are we making local lower highs, why are we chopping. You're going to be doing that because you have levels here. But in terms of external liquidity, after this, it's all the way up here at 52.982. Get above that, you're off to the races, right? So let's see if we have a nice ABCD on Injective. And by the looks of things, we should. So let's take a look. The obvious one that comes to mind is, all right, where's the low? If I go on log real quick, 2022. Yep. So the low is right over here. I'm just gonna take this as the low for now. Actually, let's take this. Here's one, B, C. So that's pretty much a 786, right? 762, pretty much a 786 in my eyes. So somewhere around the 1.272 is the first target if it's a 786, right? So we have a $63 target of our 53 for Injective, right? Now, if we see, do we have any bearish harmonics that are printed? If so, for example, that is a shark. The 1.13 of this would take us to around $57, right? So we have this zone here, and the beautiful thing here now is if this shark does come out to play, I wouldn't be saying you know, I'm going to sell on my bags here. Of course, I'd definitely take profits up here, right? I'm not some moon boy. I'm going to take some profits up here, because what I'd be looking for at this particular case, for those of you that are familiar with my streams, probably know, what does a shark lead to? A bearish shark leads to a bullish 5-0. B, C, D, right? Let's say around the same area. So perhaps you get something like this, like a 0.5 retracement, right? Quick dump down, chance to stock up on your bags again, right? And if this happens, I reckon that could be the catalyst to take us higher, because then you'd have a fresh AB equals CD also printed in this area. For example, if this were to play out, we know that a 0.5 retracement yields a 2.0 extension. A 2.0 extension will take us towards $80 basically, right? So of course, this is very much me just speculating what could happen, right? None of this has happened yet, so this is literally just this is just scribbles on a chart for now. But you know, I could see something like this happening for Injective now, right? If you truly flip bullish on the weekly, as long as you're above this grey box, go flip A, go towards the shark target rate highs, right? Anywhere between the shark to this AB equals CD target, right? Anywhere around here between this grey box. Come down, do something like a 5-0, and then carry on going higher. Something I could see happening. We'll see if it happens or not, right? Just a prediction for now. But let me just do this, create a group of drawing. Let's come back to this in the future, see how well it plays out. But Injective, right? Yeah, like literally, trend has the last lower high has been taken out. We just need a proper confirmation of a higher low now. That's all we need. Once we get the proper confirmation of a higher low, we have officially shifted from a downtrend, sorry, to an uptrend, right? And would be looking for plays at the upside, catching the upside moves. Yeah, Injective is very, very strong, bro. I love this project. It's been nice to me. Like I said, the first time I bought this was literally January of 2023, right? $1, like 30 was my average for Injective. Bought a nice spot bag, made some really nice money with this, all out, and then just reaccumulated over here. So now I'm just looking for that move up again. So Injective, next one, Aptos, right? And this is what I mean when I say the 5-0, right? So the example I just gave on Injective, if you take a look on Aptos, and this was again something I called live on crypto chat and also on the stream, we had a XABCD, right? Let me turn this off once it gets distracting. You had a XABCD, right? So initially what you had was, you had a shark. This is a bearish shark. This is the exact same pattern I just drew onto Injective, right? For that target. Look what happened once you hit the 1.13. You had a retracement. Why? Well, it was a bearish harmonic pattern, of course, right? It was validated. You had a retracement, but a bearish harmonic leads to a bullish 5-0, right? You hit the 0.495, right? Again, we were on stream when this happened, right? We were looking at this on the Tuesday, and I was saying, look, if this 0.95 closes, and more importantly, if you reclaim this, is what we said, right? Because I did this stream on the Tuesday. If you close above, you take the trade because you have a bullish. Guess what happened? You close above and you absolutely rocketed up to your actual external liquidity target, right? So my average for Aptos is down here, and I will size up should I get the opportunity to do so. For example, if we keep flipping the scene to support, right, I will size up. I just want to see a nice flush of these lows first, right? That's always nice. So maybe a flush down towards this grey box, and if that's done and it's a successful flush, I will size up some more on Aptos. I'm fully allocated, but I don't mind, rotating some profits from leverage back into the winners, right? This is one of those. This is in my top 10. These are the coins I'm in with size, so I don't mind just putting even more size into it. So maybe accumulation, manipulation, distribution. You go out to the external targets, right, up here. But this is sort of what I was describing when I said bearish harmonic to bullish harmonic, right? From a bearish shark to a bullish 5-0. This is something that could happen on Injective. But right now on Aptos, as long as you're above this C, $11.8 is a key level. That's 1.13. You've got nothing to worry about, but it's just what I don't like is all these wicks here, right? I'd want to see a clean flush first before I sized up. I'm already happy with my position size, so I'm not going to be taking any fresh longs here. If you did want to take fresh longs here, I would definitely account for the fact that Aptos could technically now have a deeper drawdown and still be fine, right? That's the problem with entering at areas after something's already moved up now. So I'd keep on it. Honestly, I'd enter on the lower time frame, and I'd just keep a very tight risk management profile. Unless, of course, you want a CMP entry, DCA somewhere in this zone, and then save the allocation for if the actual DCA is successful. That's up to you if you're not fresh on Aptos. But this is not somewhere where I'll be sizing up without a flush, right? So if you decide to size up here, just bear in mind that as long as we don't close below this red box, I'll be bullish. So we could get below this black line. As long as we're within this gray to red box, everything's fine. If you start closing below and going below $9.58, so on and so forth, of course that's terrible. You wouldn't want to see that happening. On the higher time frame, you'll still be fine, but of course any entries here would be completely violated, right? So your risk management is going to be super hard here. So honestly, if you are looking to enter fresh, I would just go on the lower time frame and look for a lower time frame to higher time frame entry model. What I mean is enter with a lower time frame mindset, take some profits out, make the trade risk free, and then attempt to make that a higher time frame trade. That's the only way you can get around now entering late, right? Because the thing is, if you go with a high time frame strategy here, you've got to account for a lot of drops, right? Like I was saying, you could drop down to $8.45 and technically Aptos would be completely fine. You'll just be retesting support again, right? So obviously if your average is down here, like you've been bidding when we were talking about this, you don't have anything to worry about, right? Because chances are you don't visit these levels again for some time. But if you're trying to enter fresh here, now that is a lot of downside for you, right? So, and like I said, I can't do anything about that. Now, if you didn't enter down here, right? And Aptos is actually one of the coins I gave entries for on my channel before this year even started, right? So I actually gave, before this move down even completed, I'd already, because there was like a 6-month order block here, so on and so forth. I was saying, look, you have higher time frame levels down here. I'm just going to set some limits, right? So this is like a more than a year old call on Aptos. Like if you didn't set limits and you didn't enter down here, then your risk management is just going to be harder up here. That's all it is. So that is Aptos. Again, 11.08 right now is your line in the sand, right? If you get below that, I'd be looking at this zone. If you guys are looking at it, this zone between $10.72 to $10.18, that'd be the next area I'd want to see a good reaction in. If you get below that, then $9.58, that's the next target. But if you do enter here, right, you either have to go in with the mindset that you could be in the red for a bit if you do get a drawdown, and of course you wouldn't go all in. Or like I said, the thing I'd personally be doing is lower time frame to higher time frame entry model. You enter it like you're scalping, take some profits, and then attempt to turn that scalp into a higher time frame swing. At least your risk management is always going to be on point, right? That's the headache That's this is the way I think about it, right? That's the trade-off you did. If you decided not to enter down here, you wanted more confirmation. That's the risk off, right? If you decided you didn't want to enter here, you wanted more confirmation. Okay, you're sacrificing areas where you can manage your risk for mental and psychological and emotional well-being, right? Because of course, the higher we go, the greener we are, the easier it is to buy. Let's be honest, right? For most people, even though this is where it should be easy to buy, most people didn't pull the trigger here. It's not easy to buy when the sentiment's in the fucking doghouse, right? But now the sentiment's up, and when in extreme greed, it's easy to buy anything. You could, you open up, you're just excited, you're like, oh, I'm just gonna put this in, I could make some money. It's easy to buy. Your mental and psychological, like state is gonna be nicer than being all the way down here getting chopped up at the lows, right? But the risk of the trade-off is for that stability and for that stability in your mental and your emotional well-being, and for a easier environment to trade, you've sacrificed good RR opportunities, and that's the trade-off, right? You take the risk here. Yes, it's uncomfortable, but then you get rewarded for that risk if it plays out. You don't take the risk here. Your risk is elevated if you enter here, right? It's a cat and mouse thing. You can't have it both ways. You can't wait for, I'm going to enter when everything's in greed. I'm also going to enter with, a proper risk management strategy. It's going to be very hard to do so here now, right? Because now you're open to chop. Because like I was saying, look, if you drop down to 845, for most people it's going to be terrible. But if for me and anyone that entered with me, it's going to be completely fine, because our average is down. We're still up, it's going to be up like, nearly like 80 something percent from average, right? If anything, we'll just size up. And the structure, there'd be no technical damage done to the chart on the higher time frame. You'd be making higher highs and higher lows still, which could send you to your next leg up. So that's just the problem with waiting so long to enter. Is anyone in Aptos, by the way? If let me ask that here. Is anyone in Aptos? Anyone enter with me? Or any of the bags in my top 10, like AVAX? Nice, bro. Okay, Mecha Brew. Nice. Yeah, great. Yeah, I do this project got legs, right? So first target for us, especially if your average is below $7, our first target is all the way up here, 1935 to 2035. That's what I want to see taken out. We've hit a big order block, basically a big area where buyers and sellers were active, which is why we're rejecting here. But as long as we consolidate here, as long as we don't lose 845, I'm not worried at all, right? If anything, our size up more should we go down here again, and then our main target is going to be at the rate of this. And if you flip this, it's going to be a very quick wick to 2950. There is no resistance on the left. 12-month buy seller zones. Have I got that on Aptos? Let me take a. Oh no, I haven't. I'll have to put those down on the 12 months. If I turn these off, XABCD, XABCD, we have one very, very key level right here. 1647, right? And after 1647, we have, if I go back to the weekly, the reason we're rejecting here. There we go. Weekly seller zone, right? Buyers were active in this candle, sellers took control back. We've identified the area where sellers were in control. You get above all of these, honestly, you have no resistance. You can see on the higher time frame, none. On the monthly, none. Right? Actually, we might have some on the monthly. No, right? All your resistances are literally in this area. That's your monthly. What about the 3 months? 3 months is the same. What about the 4 months? 4 months is the same. What about the 6 months? It's the same. So you can see no resistance on any significant time frame up here, not even the weekly. So there is literally no reason why Aptos should falter once we get above $20.35. Okay, 29.50 is gonna come fast. So this is gonna be where we have to be careful, because if sellers absolutely refuse to let us go above, this is where I will take some profits. And if you flip this, I'll just add some size back, bring my average up slightly. It's completely fine. But our main target is 1935 to 2035. Let me turn XABCD, this two back on. There we go. But that is Aptos now. Okay. Yeah, sure, bro. I'll check the DMs in a minute. Nice. I'm in AVAX. Yeah, nice. I'll go to AVAX in a minute. Vanry. Beautiful. So what happened with Vanry? We updated this last stream. We got a 40% pump, right? So out of our initial, so September, we got a 40% pump to here, to our resistance we outlined. I took some profits. I said this on stream. There we go. We got a 49.75% pump, right? I took some profits, not much, because obviously I'm not going to take much profits here when I'm expecting big swings. But I put my stop loss to break even, which is what I always recommend doing once you've had big moves up. I got stopped out at break even, right? We had a big dump down, and this is where we were looking at VanRi last stream. I was saying, okay, the only way I'll re-enter VanRi is if we now go and reclaim, basically go above 0.795 area again, above this 4-month buy zone mid and 12-month seller zone high, right? Above this area as well, I'll re-enter VanRi if we reclaim. So what happened? We went above, and then we started to successfully retest the 4-month buyer zone top, and also we're above the 2023 12-month seller zone high, right? So this happened last stream, and I said last stream I'm back in VanRi, right? So back in from that entry, we are up again 57%, and now what VanRi's done, the most beautiful thing is what it hadn't done here, it hadn't taken out the last lower high that led to the lower low, right? But now what VanRi's done, because of this dump, that's the last lower high that led to the lower low. This as well, if you include it, right? Those two lower highs led to this lower low. The first lower high got taken out here, locally speaking, which is why I did this entry, because we said, okay, look, we're now in the start of an uptrend, and now we've also gone and taken out this lower high and trying to put a lower low in. So we're very much in an uptrend now on VanRi. Locally speaking, we're in an uptrend, right, on the daily. On the weekly, the last lower high that led to the lower low is the same. So on the weekly, if this weekly close is successful, we flipped our last lower high that led to the lower low. We've been a weekly uptrend as well. Then we go parabolic on VanRi. Finally, we go back into an uptrend. So VanRi looks ready to expand. And last but not least, if you've been paying attention, you'll be very familiar with what the structure is. That is a smiley face, right? Initial support twice, radon liquidity, reconfirmation of support, higher. So now this flip is going to send us higher. So VanRi, not taking any profits right now, nothing like that. If you wanted to enter, right, again, you can do so on this daily retest. If this daily closes above, you can try and manage an entry based on, okay, we've closed above, I'm going to enter CMP, I'm going to have a DCA for the lower half of this box, right, something like this. If we close below this, you exit. You don't want to be closing below this, right? If you close below that red box, you exit. But as long as you stay within this zone, again, CMP entry, right? A certain allocation for CMP, allocation for DCAs, that's what you're going to have here, and an allocation for trend shift. The trend's already shifted, so perhaps slightly increase your CMP entry, slightly increase your DCA allocation, and have that trend shift entry, switch that to if you flip a key level into support, resistance to support is just going to add on entry, right? Because the trend has shifted now. So on VanRi, we're just looking for, continuation to the upside. That's what we're looking for. There we go. But yeah, VanRi looks great now. Right, this flush, it was painful when it was happening, but it was very much needed looking back at it, right? Because again, what we did, we put in a accumulative structure, stopped out everybody, liquidity rated the lows, and then carried on going up, right? There we go. But yeah, VanRi looks great. Nothing much to be said here. Like this is the zone. As long as you're above this, you're gonna go higher, right? So now, of course, you've got some external liquidity to contend with, but your first target to watch for what happens is 0.1355. You flip this on the lower time frame, you might chop around this like this for a bit, right? But ultimately, your external liquidity that I'll be looking at is firstly 0.1895, somewhere around here. After that is the B point of this harmonic, somewhere around 0.24. VanRi has legs. So that is VanRi. Let me check the chat again. VanRi's your biggest bag. Nice, bro. Got the airdrop and it's one of my biggest bags. Amazing. Amazing. Sui, yeah, I mean, Sui's literally in price discovery, right? That I think is just going to keep going crazy. But that is VanRi, right? So also, what did we do on VanRi? Something very important. That dump we had, another way to look at it, is the macro, right? From this low to this high, the macro range of the current structure, the 886 was achieved, right? The 87886. You've had your deep value retracement. So you can see, as long as you hold this, you're going higher. Even if you pull down to the 786, that's still fine, as long as you do something like this, right? Nice little high low here. Next one, AVAX. If you guys remember me saying like a month or two ago, one day there's going to be newbies coming onto these streams, they're going to be asking me to chart AVAX at $75 at triple digits. Well, we're on our way there, because when we said that, AVAX was sitting around like $21 literally, right? This is what I'm saying. Look, AVAX looks great. Why? Because of the 886 tab. Now we've already on our majors hits a 2x, right? AVAX is more than doubled in price. Nowhere near done, in my opinion. So the only thing I don't like currently is this. You can see the smiley face, right? If this validates, then we might have a bit of chop on our hands before we go higher. But hopefully by the time the week closes, we end up going back above 44.26, right? If that happens, honestly, I don't think we have much to worry about for now. Because even though, yes, this is a distributive structure, it's coming off of us just about to go into old season. So I wouldn't take it too seriously right now, right? But again, for those of you who don't know why I suck off AVAX every stream, it's because the structure for this is one of the cleanest there was, right? If I do this and this, if I turn off the higher time frame buy seller zone once, right, there we go. All you need is this view. First things first, let me get rid of the ABCD. You had completed M shape. I'll do a quick overview because many of you already know this by now, so I'll just quickly stream through it. Completed M shape, 2-year structure, right? From 2020 to 2022, 2-year M shape hit. This is a macro bat, right? At the 886 is 1751. After the bat hit, you chopped around, created the falling wedge. But then what did you do? You went and in 2023 you revalidated that 886, meaning buyers showed strength at this PRZ area. Right, you revalidated this harmonic still in play. The T1 of the harmonic is right over here. You ran all the way up to the T1, and then you got the type 2 return, which is very, very bullish, right? Because the T1 is great, the type 1 reaction is great. That's your reaction after the harmonic is completed. But the type 2 is what confirms the harmonic, right? Because the type 2 return is saying, okay, well, we're getting a sell pressure. We're getting sell pressure is accumulating after our first target got hit. We're going back down towards the PRZ, the price reversal zone. And look what happened at the PRZ, right? You wigged down, straight back to the 886, 17.51 again, reconfirmed it to be support, right? Very bullish reaction off it. That is very telling. And then, smiley face. Just think about that as a storyboard. Think about what happened. M shape, to consolidation, to recapture, to type 1, right? To type 2 return, to bullish confirmation of the type 2, right? Confirmation of the 886 is valid once again. To a cumulative structure, right? Just think about that from step to step. That is so bullish. This is a 4-year structure we had in the making, right? I talked about this every stream. AVAX, AVAX, AVAX. It looks so good, right? Smiley face, and now we're going up. So we've hit T1, right? The next target for me is 75.50. Get above that, your T2 is going to take you to triple digit AVAX. If you get above T2, your final bat target is going to be between 127.32 to $147, basically. So that's what you'd be looking for, right? And pair this with the fact that when that low came in on AVAX, you had a completed M shape. You also had AB equals CD, right? Look, you had a 0.5 retracement on the C. So you had, it's not a perfect 2.0, but it's very close. On the macro, that's fine, right? That is, in my opinion, a 2.0. That is a valid AB equals CD right over there. So, you know, we know the 4-point wave structure is the prerequisite to a 5-point wave structure, right? So the most fundamental form of a harmonic is the AB equals CD. You had that completing at the lows, which lined up, of course, what did the low also line up with? Like higher time frame liquidity pockets, right? So everything was just slotting into place for AVAX. So I will keep saying this, right? One day there's going to be someone asking me to chart AVAX when we hit 75, maybe we hit 100, and we're just going to think back to these days, right? Especially back 2 months ago, where we're saying, look, I was literally saying on stream, someone's going to ask me to chart AVAX once we're back up towards like $75. It's going to happen. So, in terms of ABCD, you have, well, that's not an 886. I'll take that as a 786, actually. Let's take it as a 786 for I don't like that. It's in between two. Forget the ABCD for now. We have this anyway. But yeah, that's AVAX, literally. So if you're looking to enter this fresh, of course, I wouldn't recommend entering when you had such huge swing failure patterns and you're currently below resistance, right? In this case, below a daily fair value gap. Very simple. You either reclaim to add size, or you get a pullback down towards these levels. You flush out all these wicks, you get a pullback here, and you layer in here CMP entry, DCA size up if this recapture happens, and then you go back up. Again, just like Sol, I wouldn't enter AVAX where we currently are. Okay, either the reclaim to go higher or the raid on liquidity, and this is where you enter. 2 fresh entries. Okay, don't enter where we currently are. Last time I'll say it. just because it's a coin flip what happens here now. How would I enter this? Just like I said right now, bro. So I'll just go mark out this. Hang on, let me see. Is there any other time frames? Okay, 3 day. I don't think it's on the weekly. Oh no, weekly, right? So you have a weekly fair value gap here, right? And on the higher time frame, I do take fair value gap seriously. So on the higher time frame, we do have a 2 week fair value gap here, very significant, right? What about the monthly? No. So we have a 2 week fair value gap right over here. We've hit our external liquidity, no external liquidity, sorry. We've hit our external structure, right? You had a weekly seller zone right over here in history. We've gone and hit that. You're below your 2 week fair value gap. So I would either wait for a recapture of this fair value gap like this, right? And you can be looking forward 4-hour candles, right? To start layering into this. You're looking for that move up and closes above the low, closes above the mid, just ladder in slowly each time each of those scenarios happen, right? Or you're looking for a flush on this liquidity down back towards this range, something like this perhaps, right? So if you go and hit the mid of this, even the top of this, right? Basically anything that looks like these lows have been raided, and then you've had a successful reaction off it. Those are the two scenarios where I'd actually enter on. I wouldn't enter where this currently is, because it's a coin flip right now. You're below resistance, had a big swing failure pattern, but you're also not tapped important support yet. So there's fresh, less resting liquidity below us as well. So it's a gamble whether it's going to go up or higher. Yeah, sure, we can take a look at you. Do you mean AVAX, bro, Krasadi? Yeah, okay. Do you mean, could be this one, that one there. Bearish deep crab, yeah. Okay, so AVAX, let's look at say. So let me just see if we do this. So for the bearish deep crab, if I'm off the top of my head, we're looking for an 886 retracement. Close enough. That is within reason. So we're looking at, if I believe, 382 to 886. So that's fine. And then for the extension, we're looking at 1.618. Somewhere around there. Yeah, I do see. So we do have a deep crab here, yeah, because the extension can be anywhere between 2 and 3.618. So the 1.618 is here, and then you've gone and hit your 3 over here on your actual B to D leg. The 3's over here. Okay. Yeah, I see that, bro. Yeah, sure, bro. Cetus, we got a really, really nice intro there. So let's look at Seisui and Onda real quick. And then we look at Cetus and Dupe as well. And then I'll have to end the stream there. So, say we've hit a 5-0, right? This was the 5-0 I had marked down. Rising wedge breakout. Bullish shark, bearish 5-0. How much of a reaction do we get of this 5-0? I'm not sure. For all we know, we might literally go flip the 5-0 and go higher. But if we do get a reaction off the 5-0, I do not think Say is going to come back down here. I hope it doesn't. That'd be terrible for the price. But at the end of the day, what we're doing right now is we're flipping the A point of the harmonic, right? So as long as we keep staying above this, to be honest, I don't actually think the 5-0 gives us much of a reaction at all. If this is a successful retest and you've broken out of your rising wedge and also flip the A point of your shark, I'll be looking for higher. I think Say pushes. So yes, even though there is a 5-0, doesn't necessarily mean it needs to play out, right? We've hit a 5-0. Now to actually validate whether this harmonic's in play or not, we're going to have to read the price action around this area. And so far, sellers haven't really managed to show immense strength yet. They might do by the end of the week. We'll have to see, but nothing's happened yet. So for now on Say, honestly, again, if you haven't been entering from the lows, which we're looking at it, September, literally down here, right? We were looking at Say down here. That's where our average is. I'd honestly just wait for higher time frame closes. At this stage where you currently are, I wouldn't take a risk on lower time frame entry. So I'd wait for the weekly close, in all honesty, See how the weekly closes. If the weekly closes above 0.6357, you can try and take a trade up towards 7429 and higher. Right? If the weekly closes below, then the next question is, does it close below the A? If it closed both below the 0.6357 and the A, then I wouldn't take any entries, because maybe you get a deeper pullback down towards 48 cents again before going higher. But if not, and you close above everything like this, then I would just enter based on the weekly close with invalidation below the retest wick low. Right, so let's say the weekly was to close like this and the confirmation was to open here. You'd open it long here, you'd put your stop loss somewhere below the retest wick low. So I'd put my stop loss something like this. Right, account for the retest wick low, also account for what's happened in history. So my stop loss would be something like this if I was to enter this trade, and my risk to reward of 3 minimum for me. So this is a trade I would actually take if the weekly closes a swing. Right, something like this, back up towards here. Of course, your external target is all the way up here. Right, so in terms of risk to reward, you still have an area we can manage risk, but I would honestly only do this off of higher time frame closes. If you wanted to take the risk, what you can do is, if the daily closes like this, you can open, let's say 40%, 30%, 50% of your bag, whatever you want to allocate to this, right? And then wait for the weekly to close to allocate the remaining 50%, because the daily might close well, but then the later half of the week might just kill us off, right? At least you're mitigating your risk by doing it that way. So you can be a bit creative with this. You don't have to enter just on the weekly, ladder out on time as well. But yeah, that's something like this is what I'd be looking for on say right now, because there's no guarantee that 5 is going to give you a type 2 or anything like this, right? So that's say SUI. We have come down now finally to, I believe this was our weekly. Yeah, there's a weekly buyer and a seller zone next to each other. We hit the mid of that, right? $2.98, and we're having a nice reaction off that. So again, higher time frame entries for all of these, right? We've also hit, what we haven't hit is this. This grey box is something I want to be raided. I do want a test of this grey box. I really hope we do get it, but we might build out some structure before we do that, right? But if you, again, I'm not in say based off this. I'm in say from obviously way lower, right? We talked about say down here. Again, that harmonic set off video, this was there. You had both a macro Gartley and a shark on this. Here's your macro Gartley, and your shark was from here. If I turn that on, there's your shark, right? So you have two different harmonics on this. We looked at the price action. It was very, very bullish, and we've had a nice reaction off it. So I'm not interested in opening any new say positions here. I'm just letting my bag ride off. But any visits to this grey box is what I'd personally be eyeing for. So if you get any raids of this grey box and closes above like this, that is something I'll take a long on SUI. And if you do close the week above $3.15.4, that could also set us up to have a pump up higher. Two scenarios to watch for. Again, I'm not really confident giving out entries this high up, just because this is not somewhere I'd personally open like a spot bag or anything like this, right? Because for me, the risk management just doesn't make sense here. Again, lower time frame entries, that's different, right? If you enter lower time frame, for example, let's go to the hourly. This is something you could have opened along off, right? Insane reaction off it. So if you look at an hourly price action for me, but I'm scalping, it's 1 minute to 5 minute entry models, 5 to 15 if I'm looking at the 4 hours. So even if you went to the high end of that, the 15, when you see a reaction like this, right, on the 30 minutes you see a successful close like this, right? On the 3 minutes you start seeing a buy stepping in at your key areas. That is what I would take a scalp off of. But on the lower time frame now, you'll be looking for these hourly entries, risk to reward of 3 for me to take TPs. So if you do go up this high, put your stop loss to break even. If you would have taken this trade, I'm showing you how you would have done it. If you'd taken this trade, you would have put your stop loss to break even by now. And once your risk to reward of 3 is hit, take some profits, and then after that you have a risk-free trade. You can try to turn into a swing. So if you then go here, and then for example have a pullback and flip this into support, right? Then you would size up and slowly increase your position size over time to try and have a position to the upside, right? But on the higher time frame, you just can't do this right now. The risk is too great. So this is what I mean when I say look for lower time frame entries if you're looking to get into any of these projects that are pumped off crazy off the lows. But that is SUI. Last but not least, Ondo. Ondo, again, we were talking about this all since September. Ondo was in a big accumulation range right over here, right? So last time we talked about Ondo was, okay, every time you get above this zone, get some bids, right? And on the higher time frame, if you close below this level, don't get any, right? So Ondo was here last 21st of October, right? We were there. We have had an 83% pump from our entries on Ondo, right? You went and you even flipped the range highs into support, which is something we talked about, right? And currently now you're at your macro resistance. On the weekly, if you take a look, you have resistance here in history, right? So of course you don't want that inverted smiley face to come in, but I don't think it will. If you start closing above 0.99, the mid, right? That's signs that you're probably gonna do something like this and go up. Ultimately, you want to be above $1.07. If you do that, there's not much in the way of higher time frame resistance to go higher. But that is not, again, this is not somewhere you don't have a trade on this right now. Okay, so maybe if you get a pullback towards 90 cents, that's your next area for an entry. Big smiley face, as you can see, right? Something like this. Enter here, or enter on the reclaim, right? Like many things right now, you're below your key levels. You don't want to enter as it is. Either this or this, your two entry methods. So that is on there, right? So that is the update on the top 10 bags. So what I'll do is I'll quickly look at because someone asked me to do something. I'll quickly look at Jupe because I do have a one-on-one I need to get on with. It's meant to start now, but I'll be like 5-10 minutes late. It's fine. So I'll quickly look at Jupe, and then I'll the rest. If you guys have questions, just ping me in crypto chart. Get back to you guys. Okay. Jupe USDT. Let's take a look. So we are at our key areas we have marked out, right? We can delete this. We can delete this for now. On Jupe, we can delete this. So the weekly levels is what caused us to actually go down. Do I have higher time frame levels on this? No, I don't, because the 12-month hasn't closed yet for Jupe. So for Jupe, we can see external. This is your external target right now, right? If you get below this on Jupe, you're going towards 92 cents. I would not open a trade on Jupe right now. If you want to enter Jupe, wait till you close above $1.04. This one, right? You want to look something like this. Something like this. Either you get that deeper flush down towards these levels and you wait for buyers to step in before you bid, or right now what you wait for is a buyer to step in again and reclaim the area between 1.0324 and 1.0471. If that happens, that is where I take my long off of, because you'd be turning resistance back into support. And again, what you'd have if you did this, right, is you'd have initial support, radon liquidity, reconfirmation of support. You'd have a smiley face, a cumulative structure, I target $1.22, and then 32, 33 and higher. That's how I'd be playing Jupe. So either you move down here, right, and I wouldn't set any limits. Personally, I don't set limits. I'm a dynamic trader, you guys know this. If I do set limits, it's reduce position size. I want confirmation. I'd wait for confirmation buyers actually stepping in at this area. Once I see that, I'd either enter somewhere down here, because again, what do you have here? You have an area that was both resistance and support, right? So either somewhere down here like this, right, something like this, I'd enter on that, or I'd enter on this. So if I ask for Jupe, that's what I'd do. Right, but I do need to oh, Cetus. Alright, let's take a look at Cetus real quick then. Yeah, you did ask about that, sorry, I forgot. There we go. After Cetus, I'm done. I need to dip for the lesson. Okay, Cetus, we came back down to the area we had already drawn out. Again, what is this? That is a weekly seller zone, right? You came down to the low of the weekly seller zone. You've held it, and now you are rejecting off the mid of that weekly seller zone, right? So again, no entries to be had currently on Cetus. If you do this, you claim 0.34706 as supports. You can try and take a lower time frame long on this to 0.39. Otherwise, I'd wait for something like this to occur. Maybe one more pullback. 0.28 would honestly be amazing if we got a retest of this. I don't know if you're going to get it or not, but it'd be nice. If you lose 0.28, you're going to be really blessed, because you're going to get an entry right down over here. Or you're going to get an entry down. If you get an entry here, count your, you pray to whatever divine being you believe in for giving you the opportunity to reaccumulate Cetus at a logical area now. But I don't know if they give us this, or we'll have to see. Right? I have a feeling they're going to leave a nasty fair value gap to fill in the next bear market. So for now, you're at resistance, you bounced off support, so I'd wait either for a flip of 0.34706, or I'd wait for these lows to be tagged first and wait for the reaction there, bro. If this gets lost, that's when you go to this zone here on Cetus. This is your line in the sand right now, 34706. Do you get above it, or do you go below it? right? You can see for now you swing failure pattern there, you're rejecting off it still here. So you get this, you have a reason to be in a long. You don't get that, you don't be in a long, right? So that's Cetus. No problem at all. Anyways, thank you guys very much for jumping into today's stream. I hope you guys enjoyed this, and I'll be streaming again next week. So of course, catch me there. If anyone's interested in the way I trade, just reach out to me. I do offer one-on-ones. If not, just catch me in my streams. Ping me in crypto chat if you have any charts you want looking at, or you want me to evaluate a setup you did. Right? That's how you learn. But I'll stop the recording here, guys. I'll put this on YouTube later on in the evening, and yeah, thank you very much.